In interest, it is 3 years since the Bank of England slashed its bank rate to 0.5% and then left it there. Now, that's saved some people with a mortgage thousands of pounds, but it's meant years of misery for savers, and some of those savers now want borrowing costs to go back up again. Here's Catherine Burns.
Once upon a time, not that long ago in fact, interest rates were seen as normal at around 5%, but they were cut to try to solve the financial crisis.
Tonight at 10, unprecedented steps by the Bank of England to try to revive the British economy.
Rates fell from over 5% to 10 times less than that, and it was unheard of. Now, though, it feels normal. Meet Amir Vali Mohammed and his son Fardeen. One wants rates to start to climb, the other thinks they should stay low.
So this is the first property that we've owned, and all we've known is low interest rates at the level they are just now. So if they do start creeping up slowly to 3, 4, 5%, so yeah, it'd be devastating if it did go back to those levels.
At the minute, his mortgage payments cost about £1,000 a month. But if rates ever climbed back up to, say, 5%, those payments would go up by £600 a time. So obviously he wants rates to stay low. His dad, on the other hand, couldn't agree less.
I've got savings, reasonable amount of savings, which are not getting me the interest rate, or rather the interest income as I would have desired. They are very low. I would very much like them to go up, because we are at that stage of life where my wife and myself are going to retire in a few years' time.
So we've brought a financial advisor to predict what's going to happen to those rates.
Hello, David Braithwaite.
Welcome.
Thank you.
Come in.
My opinion is that probably for the next 12 months they'll remain static, and then we'll probably start to see some very slow increases, probably about 0.25% here and there. What you should be looking perhaps at doing is making your overpayments on the savings that you're now making on your mortgage to reduce your balance.
And that's exactly what we've been trying to do over the past couple of years, so hopefully that'll help us out.
Okay, very good. And what you need to be looking at some point as well is perhaps fixing it. And to get a 5-year fixed rate at the moment, you're looking at just below 4%.
4% is probably nearly double what I'm currently paying. That's still a little bit high for me, but it just depends on how quickly and how high interest rates go to make that a viable option, actually.
On the other hand, we've got Amir, who is looking to boost his savings rates. What can he do right now?
Yeah, not so good for savers, unfortunately. If you have got money in ISAs, shop around now, especially on the lead up to the end of the tax year, because there's going to get more and more competitive as the time goes on.
Definitely, but at the moment, I think the way interest rates are, I need them to go up very much.
So we're not going to get father and son to agree here, are we?
No way. Definitely not.
Yeah, no, I think so.
Oh well, at least they can make up over a cuppa. Catherine Burns, BBC News.
What time is Mum finishing work today?
Well, let's take a quick look at some of the money pages.